Legends. Welcome, legends. Welcome to the Daily Buyer Show, where we dig all markets as they relate to crypto, and we deep dive into crypto, Bitcoin, structure, all that kind of stuff. We have the liquidity cocktail brewing, right? If you've been a part of the show, or you've caught some of my previous streams, or if you've been updated on my X, or you've been keeping in touch with my X, you'll know that there's a liquidity cocktail brewing by way of rate cut into December. So we'll just quickly go one by one. Rate cut probability stays high. So we got high chance of rate cut in December. QT ends or slows in December. All right, we've got that speculation that QT is ending, which means the Fed is going to stop reducing its balance sheet. Right? When the Fed's balance sheet is reducing like this, it does provide a liquidity drain, right? When they expand their balance sheet, QE, that's money printing, right? Now, QT ending doesn't mean that QE is starting, but from a liquidity perspective, it should stop some of that drain, right? The third piece of the liquidity cocktail is the TGA, the government's wallet, which has been refilling since July, and they tend to stop refilling when we get to this $1 trillion level. As you can see, historically, they refill their wallet, which means they're not spending, which again is a liquidity drain on markets, and they stop here at the $1 trillion level. Hence, if the government starts spending, we should see the TGA wallet drain, which also should stimulate liquidity in markets. Hence, we've got these three key liquidity catalysts that are on the horizon for December, which is why in my most recent Substack, I said we're entering this 3-week volatility window, where the week we're in currently, we've got to consider that it's end of month positioning flows. So it could be people closing positions, closing shorts, taking profits, all that sort of stuff usually shows up as volatility in the charts. Next week, we've got a batch of economic data. Given it's the first week of December, we do have some employment data, which is the most important data right now that the Fed's paying attention to. They're not that worried from what they've mentioned to us about inflation right now, and they are focused on the labor market. If the labor market tanks, it means they'll come in more aggressive with rate cuts, with expansionary policy, and essentially that would be the formula to drive massive surges of liquidity into the markets. But as it stands right now, their policy is being quite tight. Liquidity has not been flowing and is not loose, as we've been tracking net liquidity, and we see that net liquidity has been draining. Net liquidity is an indicator that I made and I give away for free that tracks the Fed's balance sheet, the government's TGA, the wallet, as well as the reverse repo market, and it gives us a really nice signal on the flow of liquidity into markets. So if anybody wants this indicator, completely free, just DM me on X. But as we can see, we've had that drain and we're seeing a slight uptick. And what we're looking for in net liquidity is this, because as you can see, when liquidity expands, right, we even have these expansions, that's what drives bullish price action in crypto. Hence, the current conditions are still tight, but we do have a shorter term liquidity cocktail coming in, which we just explained, and we'll have clarity on whether this cocktail is coming into fruition over the next 2 weeks. Hence the volatility window. So again, end of month positioning flows. Next week, we do have some labor data. Now, it's not the big labor data release that the Fed usually relies on, but it is some data that will probably drive some volatility. And following that, we've got the most important, call it date in crypto, the FOMC. Comes around, every 6 weeks or so. That'll be our final rate decision for the end of the for 2025. Okay, now as long as this stays nice and high, it means we'll get a cut. And based on the current probabilities that have been very, very volatile, we're not going to see another cut till April, right? If you've been keeping up with my channel, all of this supports my thesis of this liquidity being short-term liquidity that would drive, in my opinion, a counter-trend rally in Bitcoin. I don't see this short-term liquidity as the fuel for a new parabola or new price discovery yet. Hence, my bias is still macro bearish on Bitcoin. The weekly structure's bearish, the daily structure's bearish, the monthly and the quarterly have been flashing warnings for some time now. However, to change my bias, if the Fed indicates that they're going to step in more aggressively, and again, that's probably going to be if there's a weak labor market, if the Fed's stepping in more aggressively and we see Bitcoin price action start to build bullish structure, now that's the recipe for a potential new price discovery or parabola, and that's when I would change my bias. Okay, but as of right now, it all looks more like short-term liquidity, but we'll keep tracking it, and over the next 2 weeks, we should have a lot more clarity and data that is likely going to frame the rest of the year and into Q1. Okay, so if you're hoping for a Santa rally, this will be the liquidity cocktail that we want to see come into fruition to get that Santa rally. Rich, good morning, legend. Hope you're well today. I should probably say it's probably not for you guys in the UK unless you do this as well, but happy Thanksgiving to all our friends along the world that celebrate and acknowledge that day. So, we know what we need to see for a potential counter trend rally. We know seasonality is in favor of a counter trend rally or some type of rally. And if you're looking for that Santa rally, we just went through the recipe for it. Let's do a sweep of charts. Now, because of Thanksgiving, I believe a lot of markets didn't open. Well, Wall Street in particular. But we do have futures markets that have opened now. So let's just jump straight into the futures markets. And I want to take a look at where the DEX is at first and foremost, because we remember we're still tracking that cycle ending pattern. We're still in this basing and potential macro uptrend in formation. Hence, we're watching this closely. We've been getting that relief here from the highs, but there is, this is a consolidation in internal bullish structure. For this to start breaking down, a start would be below here, but not until we're below here is this bullish structure shifted, okay, to bearish. Now, if this move trends down this way, that would support the relief rally. However, this historical cycle ending pattern won't be invalidated until we actually start breaking this base and trending down, right? Trending down this way. Because you can see, even if you just look at how it happens, sometimes it takes longer to unfold and reverse. Sometimes the base building takes a lot longer. It comes down to retest. It does these double bottoms. Because the DEXI is a very responsive chart to economic sentiment, Fed sentiment, market sentiment towards risk and economic data and interpretation of the Fed's position. Hence, it sometimes can take time to play out, and it can form these big ranges, right? So this will still be on watch for some time. But again, if we're seeing at least this kind of move, it does support that counter trend rally if we see this structure building. All right, Gold and silver actually look really nice, really bullish actually, for something. And I was looking at gold in terms of some type of position. You got this wedge building. I'd love to be long on gold somewhere down here. So I've put this on my chart, and if it comes down to it, down into here, I may actually consider this position. But gold and silver, if you just look, if we just do a quick side note on gold, right? If you zoom out to these higher time frames, right, something I specifically pay attention to, let me just clear up this chart for a moment. Right, something I specifically pay attention to for the macro gold trade is the weekly and the monthly fair value gaps, because typically they're never lost on gold unless there's a major macro trend shifting, right? And the best positioning into gold comes when you get those pullbacks into the weekly, right? So if you just trace the weekly gaps, they never really fail. Right, here was our last biggest correction. The weekly gap was somewhere here, right? So here's where you might have started to be concerned that is a major reversal. But then if you come down to the monthly gap on gold, right, you see it. So hence, you're looking at the weekly gap, you're finding the monthly gap here, and once that weekly was reclaimed, we know what happened, right? Hence, I'm watching gold at the moment because, again, if you just look at monthly lows, right, the monthly lows are still well intact. You can see when gold sweeps monthly lows into this monthly fair value gap, that's an excellent time to be positioning, right? Here's the only time of late since the last 5 years that the monthly fair value gap has even been breached, okay? And this was our last big consolidation before the parabolic move. So when you see this interaction around the monthly, these are the kinds of consolidations that you'd want to be, or I'd like to be looking at positioning into for a macro position on gold. Considering that the thing's already parabolic from a monthly perspective, got to go look at the lower time frames. Hence, I'm watching this. So we've come and just straight bounced into this weekly gap. Right. So any other retests of this gap, and if it's holding, I'd be interested in participating in, because the monthly developing supports the weekly gap. Right, so it's a very easy trade to invalidate, because when November closes, it's going to be an inside bar, right? So we can take the November lows, just go like this, right? We can take November lows, and we know that sweeps of the November lows would be bullish, right? If it was to be swept on a monthly, because we know, especially after an inside bar, like, even without the inside bar, you get those sweeps of the monthly lows into the monthly support, the monthly fair value gap, and that's a really good position for me. So hence, I'm looking if I can get in on this thing back here, any retest back here, or if this gold just keeps wedging up like this, I'm looking for any kind of triggers. If you've watched any of my previous streams, you've seen what I kind of look for, where, because this is bullish price action and this is internal price, if we come and sweep this low, even especially into this weekly fair value gap, that'll be a trigger for me on gold. That's basically, I just thought I'd quickly sidetrack on that, because I do like to trade gold. That's the only kind of TradFi asset that I trade at the moment, and it's because gold kind of I just understand the asset for how it moves relative to Bitcoin as well. So I just delete this stuff. Anyway, moving on from gold, continue around the grounds. right? So futures have opened, and as we've been discussing, we were on watch when this daily structure was being tested, but our bias was still bullish because the weekly is still well intact. And whilst the daily's being tested and we had some cautionary signs, this isn't confirmed as yet until we get the follow through, right? Until we start getting further structure. But we were on caution because when the daily starts getting tested in this matter with the bands, that is a sign to at least pause and to assess price action. And now what we've been looking for, especially to support any type of counter trend rally for Bitcoin and any sort of bullish price action leading into this liquidity cocktail, etc., we don't want the indices turning over already, right? Too soon, because that means from a major bear market stance, the correction's coming sooner. The bear market would be coming even sooner than the pattern we've been observing in the NDX, where the NDX usually taps 280 days, tops, I should say, 280 days after Bitcoin, right? Again, I won't cover that because we've been through it so many times in the last few days. So hence, indices are all looking bullish at this point in time. It looks like we've got a nice sweep, right? It looks like internal is still bullish. It'll be bearish. Internal is still bearish. However, primary is bullish, and we've just had the sweep on the primary low, right? We can start looking at this as a sweep. So no reason to be bearish here. The internal turns bullish if it crosses here. We're already back above the bands now. You'd want to see the bands defended, and they'll turn green again. I don't see. I see those initial cautions starting to resolve here, and the key chart that we're looking at to again support counter trend rally is the RTY, because the RTY is what shows us that breadth in capital. Remember, it shows us that there is more risk appetite because it's spreading beyond the SPX and the NDX, or call it beyond the Mag 7, we should say, right? Because that's what's pretty much driving the SPX and the NDX. Now, the thing to observe here is last cycle, the RTY and Bitcoin topped in pretty much the same manner with the same timing. It looks like it's playing out a little bit different here, because here you see how they actually topped similar timing. If the RTY actually starts going into price discovery, whilst Bitcoin is still very corrective, we'd have to really be looking at all of our different signals at that time and what that means, because this is technically then a bullish divergence against Bitcoin. So which one do we weight more heavily? Do we weight the fact that Bitcoin is giving the bearish divergence on the RTY, or do we side with the RTY giving the bullish divergence on Bitcoin, right? So that's, again, it's across that bridge when it comes, but we'll be looking at all of our other signals and triggers. And at that time, if we're seeing our other signals leaning more towards bullish, Bitcoin's building more bullish structure, well, then we'll weight our probabilities of each scenario, right? So that's the game we're constantly playing here when we're trading and we're investing. It's a probability game, right? What signals and indicators do you track to weight the probability of A versus B happening? That's essentially what we're doing all the time in the markets, right? Nikkei, we'll just take a quick look at the Nikkei and also similar price action. Now, the Nikkei's on watch, the Nikkei and USD JPY, because the Bank of Japan has their next rate meeting 18th and 19th of December, and there is that speculation floating around for a potential hike. And a hike, so Japanese liquidity underpins a lot of global liquidity. So if they do hike, that could be a big volatility event. And if it means some type of impact to the carry trade, which underpins a lot of global liquidity, then that could be very bearish for markets. Hence, we keep an eye on the USD JPY and the Nikkei, because that shows us the actual action in the market. The rate decision is almost like, call it maybe the talk, right? Or the context, but what actually happens, how the market actually responds, can be seen in the USD JPY and the Nikkei. And what do I mean by that? Well, if the carry trade is falling apart, it means that capital is going back to Japan, which means that the yen should strengthen, right? So it means that US dollars are going back to yen and going back to Japan. So we should see USD JPY start tanking, and that would signal that the carry trade is potentially falling apart. So I think if we even think back to like here, the start of this year where we had the massive correction, is that somewhere here, right? I don't know if the timing, I believe this was the massive volatility event driven by the carry trade speculations, right? If you look at the USD JPY, I'd have to double check that, but I'm pretty sure this was that same scenario in the carry trade. Let me just quickly go BOJ. No, let me just look. What was that? January. Is that when they hiked the rate? Japan interest rate. April, July, December, Jan. Here, Jan. That's when they. Oh no, they still paused, but this was all essentially that carry trade worry. If I remember correctly, look, my mind's not that good. I could be wrong, but I do remember a particular time where recently one of the major crashes was all based on the fear of the unwind of the carry trade. And I think that might have been here, right? Which correlates with new price scale. I've already got Bitcoin here. Silly me. Yeah, I think this was that carry trade unwind fears, and see how we saw it in the JPY as well. But lo and behold, as the USD JPYs recovered, Bitcoin also recovered. So hence we watch this, because if the USD JPY starts rolling over, that is potentially a signal that there's a carry trade unwind happening. Okay, and we watch it with the Nikkei as well, because the Nikkei and the JPY rolling over signals the same thing. It's very high caution of the risk unwind. Trad Mag 7, nothing to look at there because the markets didn't open yesterday. So we'll jump straight into crypto. Our favorite chart first as always. Quick pulse update on it. Looks like we are getting some type of rejection here at the range highs, which is great because this supports internal crypto liquidity. A move like this would be massive liquidity into markets, fueling a huge rally. So this is on watch for us, because this is another signal that's potentially aligning for the counter trend rally. All right. So over the next 2 weeks, as we get next week, first week of December, starting month, we may see some positioning happening there in speculation for what's to come for FOMC, etc. We'll also get some labor data there. Now, it's not the main labor data that the Fed uses, but it still is some labor data. And we've also got then FOMC the following week. Right now, if those come into fruition, at the same time, we also getting that QT ending confirmed, and we see that the government starts spending and their wallet starts draining. At the same time, we've got, already seeing some type of potential pause here on the key level for stable dominance, all of this suggests that we could get that liquidity influx to support the Santa rally and the counter trend rally, which should be, I'd say, FOMC is always a tough one, right? Because what I often find is the move leading into the FOMC, or when the FOMC happens, is almost like you get the first move is almost like a fake move. Now, this is completely anecdotal. Like, there's no research to this whatsoever. It's just going off my memory. I always see that when the FOMC happens, whatever the first move is, often straight after the FOMC is the false move or the fake move. But yeah, hence, regardless, I think we're going to see volatility into the FOMC week. And I think the week after, third week of December, leading up to Christmas, is where we'll potentially see, if we're going to start getting those rallies, we should be seeing the signs of it coming to life then. Now, obviously, if QT doesn't end and the liquidity picture still seems tight, we're not getting those signals, then I don't see it. I don't see the juice happening. And if any type of relief or rally that Bitcoin has, in my opinion, I'll be fading that. It might have been AEG 20. Yeah, maybe it was. You could be right, Rich. It might have been August 2024. Yeah, you could be right, which was July. Yeah, which is about here, right? So it could have been that one. And I believe that we did have a pretty big correction throughout that time as well, or maybe we were coming out of it somewhere here. Yeah, I think we came out of it towards the bottom here, right? So hence, yeah, it's a very good chart to keep track of, the USD JPY. Now, we did have a look at stable dominance, right? Let's just have a look at Bitcoin. All right, because we are having a nice bounce. Now, I won't go through all these structure levels. We've gone through them in the last streams. Rich, you're a legend. You're here every day, and you probably just hear me talking about the same thing over and over again. So thank you, legend. Thanks for joining us again. But we won't go into structure. I'll let people watch back on the last few videos, or even jump on my X. But let's just take a look at where we are in price right now. So for me, right, when I'm looking at this market structure, the bearish market structure, now that I've got at least 2 consecutive candles in the inverse direction, this is now qualified to be a valid swing high if it turns over, right? So because my bias is bearish, the daily and the weekly is bearish, I could be looking for short setups now, right? Because I've got at least the 2 candles, so now it's a valid pullback for me to look at potential short setups. What I'm looking at is we're coming into yearly open. This is the first area where I think most would expect resistance. If you look at the bands, they're still pretty separated, right? So I wouldn't be surprised if we do see some sort of resistance there. Maybe we start trying to clear the bands because they already have provided resistance all these times, right? And you'll find after the first 2 to 3 bounces, so here you got 1, 2, 3, the bands will be tested, right? And that might be a fake out, might not. Even if you look here, you get the bands crossed here, 1, 2, 3, right? So we have had one actual test. So I'd say this is all still the one test, right? Because it's this all one still leg of price, 2, and now we're coming into our 3rd. So I'd expect the bands, we potentially penetrate deeper into the bands, possibly faking people out, and then we've got our weekly fair value gap. Now, this is an important weekly fair value gap because typically in bull markets, the weekly gaps, the most recent weekly gap supports price, And in bear markets, the most weekly gap on the sell side will provide resistance in price. So if we're starting to get above that weekly, it's implying that there is some buy side order flow coming through, but we just can't forget that until we either make new daily structure by taking out the low then coming higher, the daily won't be bullish until we cross here. And same for the weekly picture. Unless we take out the low, bringing the high lower, there is no weekly high till here. So my bias is still that after this massive leg down, right, anything that happens at the moment is more likely the build up of the next weekly high, right? And it could happen here, it could happen here, right? But I have to side with my bias unless structures shift, and other things, the liquidity picture, all those other things we discussed shift. But I have to side with the fact that it's price. If we are getting the move up, it's more likely creating the next weekly lower high. All right, we've got an inside bar developing. It's good to pay attention to. All right. Now on the weekly, we need to see at least 2 bullish weeks consecutive for me to classify. Is classify the right word? Yeah, maybe classify is the right word for this to be valid as a new structure high. So as long as it gives us at least 2 weeks of green and then it turns over, comes down here, this will be a valid structure point. If next week it just turns bearish and comes down here, well, unfortunately, that won't be a valid structure point for me to be able to move market structure. What we can be observing, however, is if next week, I mean, again, like speculative, but if next week is another bullish, let's say it's a bullish candle because it opens here, let's say it closes somewhere higher, so it's a bullish candle. And then the following week we come down, right, and sweep out these lows and sweep out these lows, and then reclaim that. This would be a valid structure point. Okay, that would be a reason to start getting bullish again. But speculation. Let's just wait till price to play out and see what happens. But we do have an inside bar developing here, which means consolidation. The longer we base, doesn't bother me at all, right? Because the longer we base, the more we start creating acceptance for the asset at that price. And if we were to base out and then potentially sweep the lows, that's the kind of setups that I look for. If we look at just the signatures of this one here, we had first week down into the lows 2, 3, 4, 5, 6, 7 to the sweep, 8, 9. So after the sweep, you still had 2 weeks to potentially look at your positioning and consider how you wanted to interact with the markets. But that was a 9-week process, right? So, you know, if we get something similar, what's a 9-week process now? So you got 1, 2, 3, 4, 5, 6, 7, 8, 9. That's into somewhere into mid-Jan, right? So my point here is that the longer we base, the longer price is potentially building some type of acceptance here. And we'd obviously just need to keep watching signals, because can't be naive to think that just because price is stalled somewhere, it means it's going to lead to bullish price action, right? Right, we had it here where this was however many weeks, and then eventually it was the big breakdown, and we are still leaning bearish, right? So those are the considerations. But again, if we basing and then we come down and sweep the lows, that builds a lot more sort of bullish context, in my opinion, in my view of the market. Again, all we can ever really do is analyze as we go. Take what the price action gives to us. On the daily, we've now had One, two, three, four, five, six, pretty much a 6-day bullish trend, right? The lows on every day have not been swept yet. Okay, now we can see we've got, what do we got here? We've got some daily order flow, bullish order flow coming through. We've got this fair value gap, right? So we've had an inversion here. And now we've got some momentum loss in this candle, but it's still closed bullish, right? So it's still quite a bullish close here. Didn't sweep or anything like that. So let's have a look under the hood for a moment on the 4 hour. Right, so we've got this will be a valid 4 hour low, okay, if price now creates a new high, because we've got at least 2 consecutive bearish candles. Right, so this is our current 4 hour high. So if we were to draw out 4 hour structure, so let's just draw out 2 things. Let's go back here and let's first of all mark previous day's high. Okay, because one signal that I look at, especially now as our context is bearish, we've got a momentum loss candle here. If this candle closes as a sweep of previous day high, then I would be more incentivized to start looking at shorts. Okay, all right, because all of our context is bearish. So shorts, I'm less hesitant into shorts. They're valid. Now, what I would consider is something to be cautious of is getting into a short too early, because obviously the yearly opens right here, and it's a level that I imagine everybody's looking for maybe an underside retest of. So sure, maybe it gets front run, we sweep previous day's highs, and because a sweep of previous day's highs would then validate this as the 4 hour low, okay, of this internal structure. This is the internal structure. We don't have 2 here, so I'm just going to skip it for now. Here, valid. Here, this is currently, we've got a valid high, right? And if the sweep comes in, it will make this our 4 hour low. Meaning, if price sweeps and then gets below here, well now this internal leg of price has shifted bearish. So you'd anticipate that price is at least going to come down, because these are all, when you look at liquidity pools in price, on the 4 hour front, these are untapped liquidity pools. These are untapped liquidity pools. See how they weren't swept, right? So here, if this was to happen, right, now again, those concerns that I'm flagging where we're still under the yearly low, and I like to see, I see this commonly happening where the 4 hour primary structure level is swept, right? Because it fakes people out into thinking, oh, okay, we're finally getting a momentum shift on the 4 hour, okay? And it sweeps, and then what does it do? It then gives us our pattern, right? So hence, that's my caution with shorting just under the level, right? But it's all, again, like this to me here isn't, in my playbook, isn't the A plus setup, like the A, call it A setup. This, if it swept here and then gave the signal, that's the A setup, because we're taking primary high fake out along with the internal shift, the current structure shift as well, and liquidity being taken. But this would still be valid, right? So hence, if that was to happen, the other thing that I'm considering is the fact that there is this order flow. So does it hold, like this daily order flow on the short term, right? So those are the considerations if you're analyzing price right now, and you're analyzing where liquidity is on the chart, where price might go. So yeah, so I'll keep that marked out there. Previous day high. So yeah, I mean, there's not really that much to report. Hey, like the chart doesn't look all that different to the last few days. Personally, yeah, I just kind of laid it out, but I'd be more comfortable shorting through here if I get those signals, right? But then we've got all these areas, you know, maybe we bounce from liquidity pool to liquidity pool in the chop environment now to build that base. So, you know, maybe from here, if these highs aren't taken, it means this is just an internal low. We might be doing a complex pullback, and we might be coming all the way down. This is our most recent 4-hour level. Maybe we sweep before it, and then we want to head back up bullish, you know, and then maybe we do the trigger there. And if this is left untapped, right, right above here, as in not untapped because it did this internal sweep, but if this is the bigger draw for structural direction, right, being the primary direction, this could be a liquidity inducement for this move up here to come down, take out all this liquidity, right, and then maybe continue down, right? And all of this, you know, this is what's so, well, I call it fun, so beautiful about trading. All of this might just be the development of potentially the daily coming in to sweep here to then go bullish again, right? Hence, I guess you map your probabilities, you look for your setups, you look at what's in your playbook, and you play accordingly. But I'm watching these liquidity pools. That's the major short, not the major short, but that's the only kind of short setup I'd consider as of what I can see in price right now, to get onto that daily short, right, is, for me, it's here. Get the signal, because then that could suggest to me that because this is a valid daily structure now, this could be the signal putting in the new daily high to go at least down here, okay? And that's where my primary target would be for the trade. That's where I would personally close some of the trade, and then I'd leave a runner, because I don't know if it's going to be continuation. I will side with continuation, but I don't know if it still wants to come up and develop the weekly high, right? Because on the weekly, this is still only 1 week of price action. So next week, if we get into next week and we have more bullish price action, I would weight a higher probability that a strong bearish signal could be more likely for continuation, because at that point in time, that's our second week, that would create a valid structure point, okay? Whereas if I take a setup this week, I'm still in the back of my mind considering that we've only had 1 week of bullish price action. So this current setup that plays out this week might just be to sweep these lows to come up higher to create the weekly low over the next new weekly high over the next couple of weeks. Probably confusing stuff if you're new here, but if you stick with me, I'll keep teaching you what I'm seeing and how I'm trading, and it'll all make sense at some stage. Also, I've got on my channel, if you go through the building block series, those are all the foundational concepts that I use in my trading. So those are, if you learn all of those things and then you listen to the way that I talk and explain things in the chart, you'll start relating all of these concepts. So I'd suggest if you're interested in kind of trying to learn the way that I trade, it's all on my YouTube channel. Just watch the building block series. Now, that series in itself, the way that I've kind of, my view for that is I'll keep adding more to it, but just taking those concepts, you can put those concepts together in a way that will allow you to build your own system and strategies, right? But then what you can do is if you watch those concepts and then you come back and you watch how I talk about them and how I apply them to the charts here, I think that could be a good way. If you're someone newer that's tuning in, that's a good way to potentially learn the ins and outs of what I'm doing and how I'm trading. Rich, do you want me to look at any specific charts today? I've just got the HNT chart loaded up. I remember we flagged that one because we were seeing rotational flows, and I know there's a bit of a lag, so I'll just do this while I wait to see if you've got any charts you want me to look at. But we said that we can see the rotational flows, and we've got to keep an eye on how these flows continue to play out. But I was also monitoring that base breakout, mitigate, continuation pattern. So let's put that on the chart here. So this is our base. All right, we've already had our first test on the base, a weekly sweep. All right. And here is where we'll get the breakout on the weekly. Okay, and we've already got an alert set on that. Now let's take a look at our bands. Yeah, so what this should look like is this. That's the kind of pattern we're looking for, right? And that time when it gets back above, the bands should be crossing, right? Support into the bands, move up. Now if we cruise out, the other thing I do like about this chart, sweep, so we're seeing some type of potential buyers stepping in here. So far the sweeps haven't led to anything significant yet. However, if this aligns with the counter trend rally that shapes up over the next 2 weeks, I'd definitely be looking at, so if we cruise out to the quarterly, right, we've got inside candle here which represents some type of compression consolidation. We did have the first sweep here, inside candle. Now if this quarter pretty much shapes up as a sweep of these two, right, I'm going to just mark this as Q2 lows, Q3 lows. Alright, so we should have a target of somewhere into these highs. Q3 highs. Alright, so if we come back down to our weekly, right, so if we look at our weekly chart, now in the last stream I went through this. For anybody who's new to watching, this base breakout mitigate continuation strategy, where we create a base within the structure. The base is strengthened if it's tested and swept, right? So this is the weekly structure. Here, here, here. We're basing. The base has now been tested, meaning weekly becomes bullish if we get above here. Now, this is the base process, okay? Specific signals that I look for and track to start positioning within the base. The breakout process is when we move to here. During this breakout phase, there is no trades. We do not touch positions, okay? Because the next phase is mitigate, where we come down to mitigate the range, the base, okay, and by this stage, we should be getting these bands crossing bullish as well. So we usually mitigate, find support into the bands. The mitigation phase is where you can fill any positions, or if you wanted to be more risk averse and wait, and didn't fill positions in the base, you can fill during the mitigate phase, and then that's where you'd expect continuation after that. I went through this in a bit more detail in I think it was in the last stream. Okay, so we were in the basing process, looking at the weekly, looking at the daily. All right. Now, from a daily perspective, we're seeing, I'll make this a bit lighter. In the daily, we're seeing that the bands are already compressing and doing this, right? It's because the bands, all moving averages, don't really work well if you're not in a momentum environment, right? What we want to see is bullish price action, at least internally, because we can see that the daily high is still here, but here, right? If it starts doing this, we're starting to get high highs and high lows. The bands will start becoming bullish, at least the daily bands, okay? And that should lead us to our breakout phase. Now, yeah, I'll be watching this, okay? And then we've got our rounded bottom, breakout phase, mitigate phase, and yeah, so let's just see. Now this would be way too big of a way too big of a stop loss. So depending on how you would try to position into this with daily structure, you'd want to be starting to trail, especially when we get out into that breakout. And then when we get the mitigation phase like this and move into the new, then your stop should be here. And then obviously trailing your stop, whatever system you use, but I would be at the very least trailing it by daily structure. But if you end up, worst case, you end up with a heavy position in the mitigation phase, and your stop loss is somewhere here until it continues again, you've still got a pretty good position there into the target, 3 to 4R. Now this setup is all going to be contingent on the liquidity cocktail coming to fruition that we're tracking at the moment. So far the signs are supporting it, but we're in the volatility window. I think that's going to do us for today, legends. Thank you for joining. We'll be back tomorrow. Every day at the Bitcoin close. All right. As always, please like, subscribe, follow me on X, and I'll catch you on the next one. Thanks, Rich. I'll speak to you soon, legend. Take care.